Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome, ladies and gentlemen, to Nirmal Bangam. We have with us Kunal Shah, head of Commodities Research, joining in. Welcome to the show, Kunal. Kunal, my first question coming to you is with regards to how the dollar index is expected to pan out from here on.
First of all, good afternoon to everyone. I think last on Monday, I explained everyone that you should always sell on good news, and that is what is basically happened. So on all the good news, we've seen market going down quite sharply. May it be gold, silver, may it be metals, especially metals have gone down significantly from the day from the Monday, and I expect the same trend to continue going forward. So just understand what has happened from the month of March till the month of December. There has been a constant rally. May it be precious metals, may it be gold, silver, or may it be crude oil, may it be metals. So now it is a year end. So we've already seen good bit of rally even in trading below 90. I'm expecting that for a couple of days market will remain subdued before most of the money managers return from the Christmas holiday. So even gold, silver, I'm expecting further downside. 50,000, I will recommend to go short in gold for evening session. 49,750 to 800 are kind of levels which I'm expecting during evening session. And even for silver, 300 to 300 400 rupees upside from here, so around 68 600 I will go short in silver. I will put a stop loss of 69,000, and I will see silver going down till 67,700 to 66,000 67,800. So sell recommendation for both. So I know it is already down, but I think silver is still 250 rupees up.
Hmm.
Fundamentals are not changed, have not changed. Fundamentals are bullish, but here on evening we are recommending a trading strategy to all the viewers. So I consider the behavioral aspect of the market. I consider the fundamental, or at evening what are the data which are coming, and the consensus. So I think Anup is asking the stop loss for selling gold. I think Anup 50,150 or maximum to 50,180 today's high. I don't think so. It should go above that, and you can see further softening. So interestingly, most of the people today, they will look at the dollar. They will look that in US $2,000 per person the stimulus is passed. So everyone, I try to understand the market mentality, and the market mentality, looking at the dollar index, nobody will sell gold. But the
Hmm.
fact is, this news was already factoring. Gold rallied from 48,000 to 51,000. So I should not just look at dollar index. I should look at the broader factors. And US 10-year bond yield are still up. The US 10-year bond yield is hovering near 0.96. So
Hmm.
I am sticking with my contrarian view for gold and silver.
Right. So apart from this, if you have to see what's happening with crude as well, clearly there is somewhat of firmness that's coming in. The expectation is bullish inventory data after the US API reported larger than expected drawdown of almost around 4.8. And the weaker dollar is something which has been supporting crude prices as well. Do you think we could see this up move that could continue?
Yeah, so for so I'm expecting it would. We've seen good rally. So contra view again, sell crude at 35.46 current market price. Put a stop loss of around 35.80. So I'm not asking for more. I'm asking for the stop loss of just 35 rupees. And from here you can see target of 350 during evening session. So I'm recommending to go short and capital on the downside rather than capitalizing on the upside.
Right. Moving from there, let's look at where the base metals are concerned. Today's session, most of the base metals have been trading higher and they've halted the 2 day decline that we saw. Again, the fall in the dollar is something which is boosting buying in base metals as well. and we are seeing a recovery that's coming in the equity markets. So, what would the strategy be on base metals?
Copper, like I said, already corrected from 620 to 602. Zinc Monday, I recommended to go short at around 222. It's 215. But there is no sign of revival coming from anywhere. So I will still recommend you 1 or 2 rupees upside in copper. Go short 604, 605. I think 598 very likely target. Zinc 216 around. You can again go short. Put a stop loss of 21790 and expect it to go down till 213.50 or 213. Nickel also you can expect go short around 1245 and expect it to go down till 1230 to 1228. So I am of the view that there is a profit taking which is expected in this market. So I'm ignoring the fact that the dollar index is weakening. So on Monday, if I would have told you that dollar index is weakening, go guys buy commodities. Today you all would be wondering that what has gone wrong. Why Kunal sir is saying buy, but things are going wrong. So when I give this view to the team, I also consider the market, the consensus, the overall view in the market, how the market can go against the consensus, and considering the behavioral aspect of the market, I recommend the trading strategy. So long term, it may be bullish, but in short term, all of these metals are poised to go down.
Right. Kunal, there's a question coming in with regards to MCX rubber. What would your view be?
Yeah, so honestly speaking, Raghavan, I will not give you any false view. There is no one in my team who is tracking rubber. So I will get back to you tomorrow morning after doing my due diligence and doing my study. So I will not be able to give you any false view. So just wait for tomorrow morning. I think I'll get back to you with the view on rubber. I'll call you personally.
Right. And anything with regards to soya refined oil, I'm assuming that's another question.
That's okay. So the fundamentals of all the edible oils are bullish only. Already we've seen prices have zoomed up, but I think these are the levels where even if you see 3-4% downside in crude oil, and you will see all the edible oils will go down. So here I would recommend contra strategy 1165. I think that around those levels you can go short in refined soya oil, 10 rupees stop loss, and wait for the downside of 15-20 rupees further. So 1150, 1140, those kind of levels can come. But it all depends on crude. If crude shoots up from here another $3-4 upside, then I think my view will go wrong. So I will stick with the selling view rather than giving any diplomatic answer.
Right. And another question coming in is what about lead? How do you see that in the evening session today?
I think lead should go down in line with other metals. When I'm expecting other metals to go down, lead should not be exception. So 155, 30, 40, I will go short, and I will cover my short positions around 133, 153, 153.50. Those are the levels I will cover my short position. So I mind everyone, stop loss, please keep around 151 rupees stop loss you can keep. And this next 2 days, the movement will dry up in the evening session because of the Christmas holiday last 2 days. So and sometimes some big movement can also take place. So trade with stop loss, but the view is on the downside.
Right. Kunal, another question coming in is with regards to soya refined. I think you already mentioned. And RM seed sell at 1080 and 5580 exit ya hold, sir.
Okay, refined soya and RMC view. I'll give you both view. Just a sec. I'll just look at the RMC. So RMC right now the sowing is going on. Uh, the consensus this time is that the sowing was good, but the yields are likely to be lower than what basically it was last year. So RMC, the fundamentals, I would still say it is not bearish at all. It is bullish only. So fundamentally, if you see 50 of the farm on February contract, which is trading at 5600, you can buy around 5600, and you are holding a position which is 1 minute 5580. You are holding position, and that is sell position. So I think today it is down by 40 rupees. Another 100 rupees down, and you cover your short positions. I'm not expecting RMC to crash.
Right. And very lastly, your view on the 10-year yields as it also affects gold prices. That's another question.
It's a good question, and everyone should understand. So, what generally happens is that in gold, especially, it affects the gold and the dollar. So, on one side, dollar index is weakening. So that is basically bullish for gold. But when the 10-year bond will start moving up, so what happens is that once the market participants start expecting that the inflation is going to come, and that's why US 10-year bond is generally picks up. So if the US 10-year, so I'm not expecting honestly inflation to really kick in because US data from last 2 months are horrible, and
Mm.
with the new COVID strain, I don't expect the people are not going to spend aggressively. So inflation is not going to come. So my view is that it should not go above 1%. The moment it goes above 1%, there will be sell off in all asset class,
Mm.
not just commodities. So I think this question is asked by Aman, and I think Aman, it's a good question. Any source of keeping track of understanding the supply and demand figures of gold? Yeah, there are many websites, Aman. You can go to World Gold Council. They publish quarterly data. You
Mm.
can go to Silver Institute, and you can find the silver demand supply. But silver data are not recent. They give 6 months, 9 months old data. These are the website you can, and I think the Google is the best source, because what happens is that a lot of investment banks, a lot of broking houses, they come up with their report, and you will get the demand supply numbers in Google also. So you write gold demand supply in 2020, and I think you will get a lot of report, and same with the silver. So if you want any particular data to understand, send me an email at kunal.shah@nirmalbang.com. I'll be glad to send you the data.
Right. So I think these are the questions that were asked. Thank you, Kunal, so much for answering them. Thank you for the information. Thank you, viewers, for joining in as well.
1 minute, sir. Do you see the down trend to continue in USD INR? Yes, Anup, I told you on Monday, I'm expecting the same trend, because the fall in dollar index is directly going to affect the Indian rupee. So it may not affect sometime commodity, but Indian rupee, it is 100% going to impact. In India, there is a robust inflow which is continuing. So the inflow in India is not abating. So I don't see any reason why USD INR pair should, really start depreciating from here. I think the trend is on the appreciation, and it will go down further by 20-25 paisa. You can remain short.
And that's with regards to where the rupee dollar pair goes. Thank you so much for joining in, everyone. Thank you, Kunal.
My